Well, following the price shock that occurred on the Kiwi this week, big announcement there. Cut rates. So the yield leader amongst the majors has cut rates. Is this a sign of things to come? That certainly will be interesting. But subsequently, we had a big move to the downside. Now, I bring this up because we're starting the week out with a Kiwi announcement, which is actually not unusual for them to. If you're in North America, you'll see Kiwi announcements coming out on Sunday evening all the time as they start their Monday morning. And this week it starts with trade. So on the 26th, if we zoom in here just a little bit, we can see this better. On the 26th, we had a surprise to the upside. On the 26th of June, we had a surprise to the upside that meaning they beat expectations as far as the trade deficit goes. Now, if we see something like that again, the market does seem to be a little oversold. We could see a 1-2 day rally. Subsequently, the market actually established support where the last surprise occurred, and we even got a little bit of a run-up before the price shock. So one to watch for sure. Coming up imminently, it's one that we're going to need to be aware of right away. All right, we're jumping all the way to Tuesday to get to take a look at the consumer confidence numbers here in the U.S. Now, these numbers are a little squirrely. This is, by the way, this is the one that's surveyed of 5,000 people rather than 500 people. In either case, you'll have to draw your own conclusions as to whether those are statistically significant, but they're not entirely unreasonable, and but they're not extremely predictable. So, for example, we had missed expectations in May on the 27th, and we get a real strengthening dollar. So there was other announcements going on, obviously a lot of things going on in the market, but consumers came out very negative. Same thing happened in June, but the market and the dollar then did weaken. So we go all the way back here to the 27th of June. Now, there was a lot of other things going on there as well, but the dollar subsequently weakened after that announcement. So it's one we're going to be watching. It's going to be tough to say whether there's any predictability here. What I would be watching is what happens when this announcement comes out. What's the reaction amongst equity traders? Because that's probably where we're going to get some better information. If equity traders respond to this, then we may see some opportunities in the yen or the or even the franc potentially. So that's going to be one we're going to watch for. If we don't see a big reaction among stock traders, then we may just ignore the announcement and not account for it as we start looking forward and projecting our trades over the next week and a half or so. Now on Wednesday we got a couple of biggies. So the first one is we're coming up on the first Friday of August. Well, we all know what the first Friday of the month is. It's NFP in the U.S. Non-farms payrolls, the U.S. labor report, the U.S. monthly labor report. And on the Wednesday before the first Friday, so in this case that's going to be July 30th, we get the ADP report, which measures the same thing, but it's a private analysis. So it's done by an outsourced HR company. They do a lot of payroll processing, etc. The numbers are pretty interesting, and we can get spoilers once in a while. The question is going to be, I think, if we get disappointing numbers from ADP, meaning a decline in total jobs, then we're probably not going to see anything that would be extremely predictable because a lot of that is being priced in the market. By contrast, however, if we get a big surprise to the upside, and the way that I would classify that as anything better than more than 100,000 jobs added. So if we get more than 100,000 jobs added, that's when we might see the market really start to move, which could send the euro-US dollar to the downside. So that's something that we're going to be watching very carefully, as a lot of us I know are anticipating a bounce here on the euro-US dollar and potential for more upside based on a weak dollar. So it is one that we're going to be watching fairly closely. I think we'll get a much bigger move to the upside. The potential for a big move is to the upside if the announcement is better than 100,000. So that's the one we're going to be watching. If we get something in the middle, slightly positive, slightly negative, it's probably priced in. And obviously, negative numbers are, I think, at this point, very priced into the value of the U.S. dollar. We aren't likely to see a lot of movement if that's the case. Well, the Australian dollar did take a beating along with the Kiwi as traders really got shook up by that cut in interest rates. We're sitting about even with this consolidation level that's occurred over the last few months. So here in May and June, we're right in the middle of this whole thing. Are we going to see a break here? Well, Wednesday's announcement could trigger that, so we get trade and retail sales. So retail sales is a big deal in Australia as well as New Zealand, and in fact, I think it's gaining in prominence around the world as an indicator of economic strength. But we also get trade numbers, so we're very interested in what's going on with trade numbers. This is one of the prime movers of exchange rates. So the fact that the Australian economy is very commodity export focused, it's going to be a big deal. So we're going to be watching that one very closely. Of course, what we're really looking for here is if we see trade numbers that are better than expected. And right now, most analysts are just barely a very small deficit. If we saw a very small deficit, that would be within expectations. If we see anything, even a surplus, that could really shoot the Australian US dollar to the upside here. The question that I keep asking myself, and as I look forward to the day ahead, is that a lot of these announcements are all piling up into, are we going to see something that's going to knock over this overbought US dollar? The US dollar has been really gaining in strength against a lot of the majors here recently. It's probably getting a little overbought, meaning that there's a correction due. Are one of these going to be the trigger for that to happen in that individual pair? And I think that the potential of a surprise on the Aussie dollar pair is occurring Wednesday when we get retail as well as trade. So trade's the big one that we're watching. Now on Thursday we get preliminary GDP in the U.S. So we're expecting to see a little bit of a tick up from last time, but we'll see. It is really a big question mark. But the reason why I'm kind of throwing this one out as an announcement to watch, because we don't like to overload a whole bunch of announcements to watch all in the same week. You just get analysis paralysis and try to interpret too many things. But in this case, we're interested in GDP because it's going to dominate the news. So everyone right now is totally obsessed with the debate over is the U.S. Well, I suppose the debate about whether the U.S. is or isn't in a recession is over, but how long that recession is going to last, and are we seeing any signs of recovery? Is there any signs of hope? Blah, blah, blah. And GDP is going to be something that analysts and the media are going to be spending a lot of time on. Subsequently, it's something that traders are going to be looking at. Therefore, it's once again one of these things that could push the Euro-US dollar. And right now, we're just sitting on top of a very short-term support level here from the beginning of July. And so signs of U.S. strength, if we continue to oscillate around this level, signs of U.S. strength could push us below this level, and we could start shooting for the 153 range again. So it's definitely something that we want to watch. I am fairly skeptical that we're going to see any kind of good news, but if it exceeds expectations, which at this point is anything better than an annual rate of 1.9%, could be good. So one to watch for sure. But more than anything else, I'm going to be interested in what happens to the media's reaction to this. How much time do they really spend on it, or is it just kind of a side note and something that fades as other releases are coming out later in the week? Now, of course, I made that comment of later in the week on purpose because, of course, Friday comes NFP, the announcement that every trader out there, especially new traders, are completely obsessed with. It's not extremely predictive is the problem. What it does predict is volatility. Now, this week may be a little bit of an exception to that rule because I'm very interested in what happens with NFP this week because it could be the catalyst that pushes the dollar. So you can see over the last 2 weeks what's been going on with the value of the dollar. Now what we're looking at, we've shifted gears from the euro US dollar. This is the dollar index. So this is the dollar versus a basket of other currencies, including the euro. But so from here, we're asking the question, all right, if the NFP report comes out remarkably negative, so I would I would even say in this case, usually I look for anything above or below a positive 100,000 new jobs or a negative 100,000 jobs lost. So anything beyond those ranges as being that's when I start to pay attention. But in this case, if we get anything that's a negative number, meaning less than less than negative 50,000 jobs lost, that's where I'll start to pay attention because I think that that could be a catalyst very easily to send the dollar back down towards support, which in turn is going to be ripple through the forex. We would see a lot of these new trends that have appeared over the last week and a half get disrupted. So that's one that we're going to be watching. If it has not, if another one of these announcements have not acted as that catalyst, that's going to be the one we're paying attention to.